Hi guys, this is a quick update to update everyone on the services which we are providing here at the Financial Freedom YouTube channel. I've got a lot of questions recently over the last month or so, sort of how exactly does each of these services differ. So we're going to go through each of them. If you're looking for the next stock market or Bitcoin update, obviously tune in to the next update, or you can join the group if you would like. So let's go through each of these one by one. Now, the least related to the stock market, we're going to start off with this one here. So this was really prompted by a group member about 6 years ago, because I've developed a spreadsheet effectively to look at mortgages and any amortized loan. Likely the biggest amortized loan anyone is going to take is a mortgage. So basically for $29, which is the discounted price, we work through this entire spreadsheet, which I'll show you in a minute, completely customizable. And we give some hints, tips and tricks as to how exactly this mortgage, or any amortized loan for that matter, can be quite dangerous, okay, if you don't know how the interest works. And effectively, or essentially, the difference between an amortized loan like a mortgage and a linear loan is that all the interest is front loaded, and that can lead to a lot of difficulties if you don't know exactly what you're dealing with, right? You sign on the dotted line usually to get a reduced monthly payment, but a reduced monthly payment can come with a lot of caveats to it. The number one being that actually each monthly payment going out, perhaps only 20 or 30 or 40% of that is actually principal. And of course you are charged interest on the outstanding amount still owed to the lender. So we discussed the 90-10 rule, overpayments, how to change these variables. We work through the exact spreadsheet which we have developed, and then we give some interesting pros and cons to refinancing and remortgage, which aren't necessarily designed for your benefit. Because if you think about it logically, when you refinance, when you remortgage, as per what most brokers would want you to do after 2 or 5 years, they get their commission. And we've just said that you've front-loaded all the interest, right? So in the first 10 years or 5 years, depending on how many years you get it over, that's when all the interest is getting paid. Every time you refinance or remortgage, you are effectively resetting the whole schedule to zero. So you then have to then start brand new cycle, and then the front-loaded interest then plays a big part once again, right? So we work through all of that, okay? There's a lot of maths involved here, but actually it's very, very simple. So let's just follow it through here. This is effectively the spreadsheet which we have developed. Now we've got a random hypothetical example here just to show you how it would work. These are customizable charts. Everything's here. Essentially, it's all done for you. So 750k house. Let's say you're putting down 435. Well, let's just keep it simple. Let's say you're putting down 400,000, right? So you're moving into your second home. That would be a 5% deposit. Sorry, 400,000. Right. So you're getting £350,000 from, or dollars from, the lender. Let's say you want to get that over 25 years. So obviously that is completely customizable, right? If you see, the lower the term, the higher the mortgage payment, right? So mortgage brokers are designed to essentially fixate on this cell here. That's not necessarily designed for your benefit. If we just take a look at this right now, 20-year loan, 4.5% interest rate. Once again, the spreadsheet is designed for both fixed and variable, and fixed changing to standard variable. So let's say you get a 5-year fixed rate mortgage. You know exactly what your mortgage rate will then be after that. You can then, it's all completely customizable, right? It works with any type of interest rate, fixed or variable or both. Let's say you're starting at 4.5. Well, this is the total interest payable in this hypothetical example, 129,000. But what if you can't afford 2.2 a month? Let's say the way that you've done this, it's only 1,800 perhaps. So the mortgage broker is going to continue to increase this to get you down to your payment, right? And whilst that might be well and good, bringing it down to 2,800, suddenly that has jumped from, I think it was 129 I just said, to 165. And so you can see where the trouble lies, because now if you were to take a look at this, once again, it's all done for you. Everything's highlighted here on a 12-month schedule. If you wanted to, let's say hypothetically, 1 year fixed rate, which doesn't even exist in the world, but let's say 1 year fixed rate, after which point it's going to drop down or increase to 5.67. Everything after that point will then change to the new rate. Okay, that just proves that is for fixed and variable. But if we take a look at this, this might affect, this might really worry some people. I mean, perhaps it's really obvious, but I'm not too sure it is. Let's just take out the extra payment, right? We'll get onto extra payments in a minute. But, that's quite worrying, really, that out of the 1,800, I don't know, I mean, perhaps logically, off the top of your head, you would think a good 50% of that surely should be principal, when really it's 521 over 188. So in the first year, if you were to look over here now, I'm now over here, in the first year, you've paid a whopping $15,600 of effectively monopoly money to the bank manager, and you've only paid off $6,000 off the entire principal, or 29%. It's quite worrying, isn't it? So everything is customizable. This is broken down over 10 years. You've got the cumulative interest, the linear interest. You've got a few charts here too, and it's all there basically, right? So I don't want to give too much away, but it's all there. I think it might be the best $29 anyone has ever spent. And obviously you've got extra payments here, which we discussed to help to bring down the interest rate. But, just in this very simple example here, I mean, that is quite worrying, right? Now, there might be people out there who enjoy paying interest, but I'm guessing a lot of people watching this actually want to reduce that column as much as possible. And if you understand the maths, which although may appear quite complicated, they're actually very, very simple. You can actually attack this loan very, very quickly and pay nowhere near 266. Okay, there are various ways around that, and that's what we discussed. So that is the amortization course. Now let's go on to the let's go on to the secret Facebook group. So on the secret Facebook group, we're basically doing anywhere between 40 to 1 hour long videos, Mondays and Thursdays, usually 3 to 4 hours before the US market opens. And we cover everything. We're not only interested in crypto, we're interested in anything that is making money. Right now, we think Nvidia is going to become the world's most valuable company. This is getting recorded early January 2024. So we'll see whether anything comes of that. Now, we're doing a 3-month discounted offer here. It's a via monthly subscription through Stripe, through the payment processor for Teachables. If you want to pay in crypto, it's 2 months upfront, and you have to message me through the Financial Freedom Facebook page, which is all here. Just go and follow us here, and everything's there. I believe there's a link to the Facebook page here too, if you just click on this link here. And basically, we're covering everything. The Elliott wave, the fibs, there's education there, and you're following my own positions. Be them trades, be them more longer term plays in stocks, crypto, and everything else, right? We're not really too fussed about keeping it, just covering things for the sake of covering things, right? We're only going to cover things if they're actually going to make money. So in January 2024, if something is perhaps going into a more longer extended correction, like let's say perhaps Bitcoin may or may not do, we're not really interested in covering that, okay? So we called all the big moves in crypto in 2023. We are entering the last stages of this secular bull market, but there's still plenty of trading opportunities, swing trading opportunities, as well as investments. Okay, there's also the opportunity to ask me regular questions and ask for group updates. Okay, if you would like a discount code for this, I'm sure I can rumble one up together. Just message me through the Financial Freedom Facebook messaging system that we have there. Now, some people have an issue with Facebook. Over the last year, we have now started to share the videos, as you can see on Teachables too, right? So you get access to the group to ask for all the questions and the updates and everything else, and also we're sharing them on Teachables. The advantage of that is there is an app which you can download on iOS, which allows you to get 180p definition to the videos because Facebook compresses it to 720. It's still viewable, still view everything perfectly fine, but for those who enjoy 180p, we've got it on Teachables. And usually what I do, once I get a good 10 or 12 videos on there, I start to delete the previous ones. Okay, so as you can see, these are very detailed videos. We don't mess around with the Facebook updates. You know, no one can be told what the secret Facebook group is. You kind of have to see it for yourself. And then finally, this sort of 13 years in the making here, I've been investing since 2008 really, since the crash lows, more than 15 years. This was developed during the C-19 pandemic, and it took me sort of 6 to 9 months to develop it purposefully. I've done 48 modules as a shout out to Robert Greene, and really I think it covers everything. I think if anyone can study this, can understand this, and can apply it, not just undertaking that knowledge, actually applying that knowledge, I think they can do very, very well. Feedback has been great. There's been a lot of people who have completely turned their entire trading account and life, for that matter, around using these principles. We covered the 4 areas which I think you need to know. One is Elliott wave and fibs. Second, volume. With that, I'm including candlesticks, I'm including Wyckoff, whole bunch of volume tactics there, and also volume profile. So number 1, the first quadrant, Elliott wave and fibs. Where is something going to go and how far is that distance? Volume, what actually makes the market move? Supply and demand. Without volume, there would literally not be a market. Number 3, no need to follow people who draw random lines all day long. We teach you price action execution over 5 clear, distinct, edited down videos and the special patterns that you need to know about. There's no one out there who can teach anyone more than I've taught you here. We keep things simple. No need to use fancy footprint data, market order flow, DOMs. All of that is largely useless, right? The more you complicate your trading and investing, the less money you're going to make. That's the third quadrant. And the fourth quadrant is auction market theory, bringing the whole process together as it's an auction, cattle auction, real estate auction, a car auction. The stock market is an ongoing auction, and within that there are certain nuances that you have to know. Inventory positioning, overnight positioning, RTH, what does that mean? The VWAP, the different day types. It's more advanced techniques which I don't share on YouTube, really, right? Because that would be unfair. So there are 4 parts to this. Obviously, around that, we supplement those ideas with risk management, psychology, fib time, COT report, oscillators, indicators. Just 1 hour long, I've discussed the 10 indicators and oscillators that you need to know. But understand, oscillators and indicators are what we call first order or second order derivatives, right? There are 3 variables here: price, time, and volumes. RSI, OBV, doesn't matter. They're all derived from those 3 variables that we've mentioned. So we like to stick as primary indicators: price action, auction market theory, volume, Elliott wave, and fibs. That's the primary tools of analysis, which 99% of the masterclass is designed. There's a reason I've only done 1 module out of 48 on oscillators and indicators, because those are not primary tools of analysis. Any YouTuber, any trader or investor who's primarily using second or first order derivative indicators shows lack of knowledge and understanding of the stock market. Why do we need RSI? How can we reliably trade off RSI? It's derived from price, right? Why don't we just understand price? And where does price come from? From volume, right? From supply and demand. So we like to go to the source. Once you understand how the market works, the way that I've described it, you can't really go wrong, frankly. Okay, so that's that. And then towards the end, we discuss some important techniques, which once again I don't really share, other than perhaps on the group occasionally with certain positions. We know that Nvidia, I won't tell you which pattern it formed, but it got us in one of these patterns down here at 400. It's at 512 now. That's a 5,000% move in weekly call option easily. Then we discuss futures, options, right? How to actually express your opinion, assuming you're not just buying the common stock, right? Perhaps using CFD, probably not the best idea. Futures, options, different nuances that you need to know. They are the same, but in fact they're very, very different too. Okay, so we discuss all of that. I think if you can master these 7 modules in options, and once again, there's no need to figure out how to do a 2-3 ratio spread. Who the hell cares? Just keep it simple, right? Vertical spreads, long calls, straddles, expected moves, and earnings. We discussed that. There are various strategies around earnings, and then towards the end there are Excel sheets, resource and statistics, and everything else. Okay, so I think everything's there. The feedback has been great, frankly, on all 3 of these. The mortgage amortization course, we've been meaning to get a part 2 to that over the last couple of years. I mean, 70% of the workup has been done, but I like things to be perfect before I release them. There's a world-ending issue that we have. I mean, obviously the world's not genuinely going to end. Well, we hope not. But I'm just sort of kidding when I use those words. But hopefully, and besides, even if it does crash 90%, who cares? If you have the knowledge, you'll be able to time that to perfection and likely make a lot of money out of it. I mean, it will be the second biggest short in the last, as it turns out, 18 years. But we've been meaning to get a part 2 to that. So hopefully we get that out over the next couple of years. Right now, you're probably looking at a Q4 24 release, if not 2025. But those are the products that we offer. Hopefully you guys found this useful. I just wanted to do a quick video update. I will be adding this to the Facebook page too. Any questions, any queries, you want any discount codes for any of these products? We don't really offer them out. They're also, they're very few and far between. Just message me through the Facebook group. Keep up to date with that, and then you'll be able to know of any discounts. But I'm going to wrap it up there, and I'll see you guys either on the group or on the next YouTube video. Catch you guys later.